up, guys? It's been a while. Jordan Dove here. Been busy. After 5 years, our nonprofit baseball program, our organization, came to an end. We dissolved it officially today. I just wanted to take a moment to thank all of our parents that participated and supported our organization, our sponsors, our players, our coaches. Thank you guys so much. It was fun. It was a blast. Had a great experience over the last 5 years, but this too, as all things, shall come to an end, as somebody once very famously said. With that said, the 10-year bond yield, as you guys know, been talking about this for a long time because this is one of the biggest markers in our industry and quite frankly for the financial sector in my opinion. But the 10-year bond yield is almost at 3%. It's just shy. You all saw that the 2-year and the 10-year spread inverted for a few days. The 5 and 10 were inverted for a while there. Now it's not inverted, but it's getting really interesting. And if you don't know what that means, when short-term bond yield rates are higher than long-term bond yield rates, it's inverted. 6 out of the last 7 times that's happened has led to a recession. When you're investing in something, the longer you're going to hold your money in something, the higher of a return you would expect. So it inverted. 10-year was smaller of a return than the 2 and 5-year. 2-year kicked down, 10-year kicked up. The 5-year stayed there, but now they're not inverted. So we're going to be watching that closely. We're going to see what happens. And how about those mortgage rates? All of those experts who predicted rates would remain low for the year and we would see it in the mid to high threes this year. If you watched my video back at the beginning of the year, I did my yearly predictions and I did predict by the fourth quarter that we would be in the low 4%. But guess what? Today, 5.26 fixed national 30-year mortgage of locked rates. We saw some buyers and our mortgage broker across the hall try to lock some rates last week for some buyers. 5.56, absolutely nuts. Well, it's not actually nuts. You all knew this would happen. Maybe not this fast, but we did know that it was coming and it's coming quick. If you are in the market to purchase, rates are going to keep going up higher. Do not miss out. Wall Street, private equity funds, foreign investors are still buying in cash. They're still paying above market value. Prices are going to keep going up until they stop buying. The only way they stop buying is, I think, if the federal government intervenes. And we know how fast the government moves, okay? So anyways, historically, 5.5 interest rate, it's actually not that bad when you look at it historically. I remember my mother and many of you and your parents bought homes. Their first home, it was $100,000 in the late 80s, early 90s, and the rate was 9%, 10%, 11%, 15% if you bought even before then. But let's say 9%. Bought it for $100,000. That's $9,000 a year in interest, right? And today, in our market, with the median priced home of $460,000, now you take 5.5%. What is that? That's $25,300 a year in interest. That's a 181% increase, even though the rate is almost 4.5 points lower, but 181% more in annual money collected by the bankster gangsters. Okay, so a 5.5% interest rate. Let's think about this logically. I don't think it would be so terrible if prices were near the median in, say, 2018 or even 2019 before we had this big straight line run up. But I've got to tell you guys, on my listings I've had recently, which are well above the median price in Southern Nevada, I'm still seeing a ton of cash in this market, and it's coming from private equity. It's still coming from foreign, still coming from hedge funds, etc. But I'm not seeing as many financed qualified buyers in the higher ranges. And what I mean by that higher is in the $500 to $1 million range. Okay, so with a 20% down payment, which is what I recommend you do if you are purchasing a home because you don't have PMI, which is mortgage insurance. So with the 20% down payment on a median priced priced home. Again, I'm using Clark County, Nevada, which includes Las Vegas, Henderson, North Las Vegas. Okay, the median price of a home, $460,000. That estimated monthly payment, which includes PITI, which is again our principal, interest, taxes, and insurance. We're not including any HOA costs here, but PITI only. Your estimated monthly payment is $2,557, and you'll need around $100,000 to be able to close on that property. But most people do not put down 20%. On average, I think it's 7 to 8% nationally. In Southern Nevada, the household median income, the average income of everyone who lives in a home, the average household, $56,000. Okay, $56,000. So most people don't put down that 20%. They don't have $100,000 to purchase a home. But let's go with 10% down on a median priced home. Your total payment over 30 years, principal $414,000. But are you ready for how much interest you're going to pay over 30 years on a $460,000 median price single family home? Take a wild guess. You're going to pay $432,000 in interest. You're going to pay more in interest over 30 years than the original principal balance of that home. Now, with 10% down versus 20% down on that same purchase price, your payment jumps up about $420 a month to $2,974 a month. And if you don't know the way mortgage banking works, they go off what they call ratios. I'm going to explain this to you, okay? So the average couple or person that qualifies for a mortgage on average can qualify for a $2,000 a month payment. Average, okay? Some people qualify for more, some people qualify for less, but the average, the norm, what we go for in the industry is $2,000 a month payment, okay? The way it works is, let's say, for easy public math, if you guys know me, I don't do public math, but let's say that a couple makes $5,000 combined income that they can prove through either their W-2s or tax returns, whatever, per month. Now, they're going to take 50% of that right off the top. Okay, they're going to take 50% off right off the top, which leaves you with $2,500. Now, when you have that $2,500, what they subtract is their cushion. So that other $2,500 is going to pay your utility bills, your food, your cost of living, like, being able to do entertainment and things like that. That's their cushion. Now, when they take off 50% of that, that leaves you with $2,500 left that they can apply to your mortgage principal, but it has to be under 50%. So what they do here is they start to deduct your interest payments, your car payments, your minimum credit card payments, student loan payments, things of that nature. So say if you have $500 in car payments and credit card bills per month, you now started with $2,500, you now qualify for a $2,000 a month mortgage because they're going to subtract that based off 50% of the income you can prove. So let's go back and see what $2,000 a month affords you at a 5.5% interest rate, because this is average. This is what the average person can afford. Are you guys ready for the answer? Because I want to know what you guys think, okay? What do you think? Think about it, all right? The median priced home, as we said in our market, $460K. Your entry-level starter home, $460K, 1,800 square feet, whatever. Now, with 10% down at 5.5% interest rate, a $2,000 a month payment will afford you or purchase you $310,000. That's it, $310,000, which is right now like a highly upgraded condo, 3-bedroom condo in a nice area, okay? That's $150,000 difference from the median priced home in Southern Nevada, okay? $150,000 difference what $2,000 can pay you. Now let's go back 18 months when you could have received a rate of 2.75% on that interest rate. The same $310,000 home cost you $1,559 per month. You see where we're going with this, right? So what happens now if you had a 2.75, 2.75 interest rate 18 months ago, you could afford a $400,000 worth of home with a monthly principal, interest, taxes, insurance, PITI payment of $2,011. So that puts us right there at that threshold. But home prices have gone up a ton, okay? So what that means is that in the last 18 months, buyers have lost 29% of their purchasing power. $400,000 is now worth $310,000 in the mortgage banking finance world, but homes have gone up 25%, give or take, in the past 12 months. Effectively, home buyers are completely priced out of the market for the average person who qualifies for a $2,000 a month mortgage. Think about that. Really interesting. But like I said, on our listings, we still have the cash buyers, private equity, hedge funds, foreign nationals, paying cash, paying above market value, still going to drive up the prices because our inventory is low. Okay, so I have a couple articles here too I want to talk about that. Rents jump by nearly 20% in 2 years. That's coming from a new report from Realtor.com, and it shows that rental prices rose nearly 20% from March 2020 to March 2022. Asking rents are nearly 1.2 times higher than 2 years ago, which will likely lead to rising rental affordability challenges for even more households. We know a lot of people are struggling with rent costs, and it's only been getting worse, so we are at record highs. The United States of America median rental price reached a record high of $1,807 in March of 2022. And I wanted to discuss some of the biggest growth markets over that 2-year period. Number one, Miami, Florida, 58% increase over the 2-year change, median rent $2,988. Riverside, California, number two, 48.2% increase, 2-year change, median rent $2,678. Tampa, Florida, 45.8%, 2-year change, median rent $2,114. Also on the top 10 list, my city, Las Vegas, Nevada, which increased 34.4% over 2 years with a median rent of $1,623. And some of the smallest growth markets on the 2-year average change, Buffalo, New York has actually lost 2.3% with an average rent of $1,293. San Jose, California, 1/10 of a percentage point to $3,075. Detroit, Michigan, 8.8% increase over those 2 years, with a median rent price of $1,360. So you could tell the difference in the two markets, what's emerging, what's kind of coming down, slowing down. I'll put a link in the description to those top 10 markets, both on the growth and slow growth, and you guys can check that out, okay? But rents are rising everywhere. Rates are skyrocketing. It's getting really interesting out there, ladies and gentlemen. It's getting interesting. And I've said this before, this 40-year economic boom cycle that we've had, this party, it's coming to an end. It is coming to an end. You know, I think the play right now is commodities. And again, this is not financial advice, not what I've done, just what I've done. But again, this is not financial advice. Investments carry risks, guys. Do your own research, but think and don't listen to all these people on TV. Okay, I have what I've done is I've hedged inflation with commodities, Series I bonds, gold and silver, guns and ammo. Can't go wrong with that. I am in the process of purchasing residential real estate, and I know many think that there is going to be a crash. I think that a possible correction is much more likely. That's a much more likely scenario, but as long as hedge funds and Wall Street and the cash keeps buying up properties and turning them into rentals to charge a premium, that's what's going to happen. It will keep going up while there's low inventory and they keep buying in cash. When that stops is when I think we'll have a correction. I don't know how long that is. I don't know when it's going to happen, but I'm going to be looking to the government to propose some sort of regulation for these companies to do that. But then again, they're all in bed together, and we know how quickly the government works, right? Okay, so inventory is still thin, although it's growing slightly in this market, but I have a deal that makes sense. It's an owner financing deal, a seller carry deal, and I want to explain that on another video how that works. The seller is basically going to carry a note which will have terms for a maturity date, which they will get paid by X date with X amount of interest. But this deal makes sense to me. It really, really does make sense to me. I've ran the numbers 15 different ways, worst case scenario, best case scenario, and I plan on having a 4-month exit. So if the numbers make sense, I think it's always a good time to be buying and selling real estate, but the numbers have to make sense to you. These numbers make sense to me. I know a lot of people like the market's so high, this, that, the other. Interest rates are high, yes, but this deal makes sense to me and I am going to make some money on it. Okay? Now, the Fed is going to raise rates at the May 4th FOMAC, and the consensus is 91% that they will be raised 3/4 of a point to a full point in May. I believe that's on May 4th. And as long as the rates are lower than the reported inflation number of 8.5%, things are going to be really wonky. How long do you think it's going to take for the Fed to get rates above inflation to start lowering inflation? And I think it's going to take a few years. Mix in what's happening overseas, United Kingdom mercenaries being captured by Russians in Ukraine, Russian warships sinking, the flagship. Man, I don't know, but it's nice being here. I know I need to be on here more. There's so much knowledge and information out there, and just want to be a messenger to share some of the stuff that I see in my industry and also talk about the other things that are going on in our world. But one thing I'd like to say is build your war chests. Build your war chest. Stack as much as you can, because there are going to be opportunities coming. There is going to be opportunities coming, and you will not want to have your powder dry when that time comes, okay? You want to be able to make some moves, because you're going to have an opportunity, a generational opportunity to make a lot of money, and I want you guys to do that. I'm going to do my very best to share that information with you guys, okay? I am not the smartest guy. I'm definitely not the smartest guy, but I associate with some people who are really, really sharp, much smarter than I am. They don't get on here doing videos, but I do want to share the things that I am hearing with you guys so you can hopefully apply it to make your quality of life better, okay? I'm Jordan Dove. Please like and share this video. Subscribe, comment. I like hearing from you guys. I'm going to really try to get on here as much as possible. But again, I wanted to thank for all your support. I wanted a big shout out to Greg Manarino, good friend of mine. He's absolutely crushing it. Just what a brilliant, brilliant guy he is. Shout out to all my friends and family who support our business. Shout out to the haters who don't really give a shit. I don't care. We're doing great, all right? Love you guys. Have a good one.